The semiconductor industry is entering an exciting era as we step into 2025. But here's the urgent question. Are you ready to seize the opportunities before it's too late? With rapid advancements in artificial intelligence, autonomous vehicles, and the Internet of Things, the demand for cutting-edge chips is soaring to unprecedented levels. This is your moment to learn about the stocks that could shape the future and your portfolio. Let's dive into the most promising semiconductor stocks poised to deliver significant returns in 2025. To begin, let's look at the big picture. In 2025, the global semiconductor market is projected to reach an astounding $640 billion, a 10% jump from 2024. This growth is fueled by a 35% annual increase in demand for AI-specific chips, which alone will account for $120 billion of the market. Think about it. AI chips are the brains behind machine learning, autonomous systems, and even the devices you use daily, like smartphones and smart home gadgets. Isn't it amazing how semiconductors power so much of our modern world? Now, a significant shift is happening within the industry. Past supply chain disruptions are being addressed, thanks to major manufacturers ramping up production. Companies like Taiwan Semiconductor Manufacturing Company, TSMC, and Samsung are opening new facilities in the United States and Europe, decreasing global dependence on Asian manufacturing hubs. On top of that, government support through initiatives like the CHIPS Act is pouring $39 billion into domestic semiconductor production. With the industry more robust than ever, let's dive into the companies leading the charge. First up, we have Nvidia, ticker NVDA. Once known solely for its graphic cards, Nvidia has transformed into a juggernaut in AI, data centers, and automotive markets. Why is this important? Nvidia's GPUs are critical for training AI models, making them a cornerstone of the tech industry. In 2024, Nvidia's data center revenue skyrocketed by 279% to $18.4 billion. That's largely due to its H200 GPUs and Grace Hopper superchips, both key products with overwhelming demand. Did you know Nvidia controls an 85% market share in AI training chips? Think about that for a moment. Nearly every major tech company relies on Nvidia for their AI needs. And with their upcoming B100 chips promising 50% better performance, Nvidia's innovation pipeline is stronger than ever. Nvidia's financials are equally impressive. The company boasts a gross margin of 74.2%, operating margins of 58%, and a massive $42 billion cash reserve. While it's trading at a premium valuation of 32.5 times forward earnings, the company's projected 45% earnings growth through 2026 makes it a top contender for any investor's portfolio. But before we proceed, here's a question. If AI is the future, how pivotal do you think a company like Nvidia will be in shaping that future? Comment your thoughts below. Next on the list is Advanced Micro Devices, ticker AMD. AMD has made remarkable strides in the data center market with its MI300 series AI accelerators and EPYC processors. These products have helped AMD capture a 28% market share in data center CPUs, a significant accomplishment in such a competitive field. In 2025, the MI300 accelerator alone has $3.5 billion in projected orders, showcasing its strong foothold in AI. AMD's acquisition of Xilinx further strengthens its position in adaptive computing. The synergy between these companies has exceeded expectations, adding $4.8 billion in revenue in 2024. What sets AMD apart is its commitment to innovation. With $4.5 billion in R&D spending, a 40% year-over-year increase, AMD is doubling down on AI accelerators and advanced packaging technologies. For investors, AMD offers a blend of growth potential and reasonable valuation, trading at 28 times forward earnings with a projected 35% earnings growth rate. Now, let's think about this. Could AMD's consistent gains make it the dark horse of the semiconductor race. Moving on, we have Broadcom, ticker AVGO. Broadcom's acquisition of VMware has transformed it into a comprehensive technology solutions provider, combining its semiconductor prowess with software innovation. Broadcom's custom AI accelerators generated $5.5 billion in revenue in 2024, and its networking solutions grew by an impressive 42% year over year. Isn't it fascinating how Broadcom is leveraging its expertise in networking and storage to meet the AI boom head-on? Financially, Broadcom is a powerhouse. With gross margins of 75% and a dividend yield of 1.1%, it offers both growth and stability. Its recurring revenue now accounts for 80% of total sales, providing a predictable income stream for the company. Broadcom's forward-looking investments in next-generation AI chips and software integration ensure its competitive edge. Here's something to consider. How often do you find a company that balances innovation with solid dividends? Broadcom might be that rare find. Our next pick is Taiwan Semiconductor Manufacturing Company, ticker TSMC. TSMC remains the go-to foundry for cutting-edge chip manufacturing. In 2024, the company achieved a 60% yield rate with its 3nm process technology and is on track to launch its 2nm technology in 2025. TSMC captured 90% of high-performance computing chip orders last year, with AI-related revenue climbing 95% year over year. TSMC's commitment to reducing geopolitical risk is noteworthy. The company is investing $41 billion in new facilities in Japan, Arizona, and Germany. These moves are designed to diversify its production and ensure stability in a volatile global landscape. TSMC's operational excellence is also evident in its 54% operating margins and its ability to maintain an 18-month technological lead over competitors. With a dividend yield of 1.4% and a strong capital expenditure plan, TSMC is a cornerstone stock for those looking to invest in the backbone of the tech industry. Here's a question. Could TSMC's strategic positioning make it the safest bet in a high-stakes market? Finally, let's talk about Micron Technology, ticker MU. Micron specializes in high-bandwidth memory, HBM solutions essential for AI applications. In 2024, Micron's HBM chips commanded 90% gross margins, with $5.2 billion in advance orders from major AI players. Isn't that an incredible testament to its market dominance? Micron is also advancing its manufacturing capabilities. The transition to 232-layer NAND and 1 beta DRAM nodes has improved cost efficiency by 25%. Operating margins rebounded to 45% in 2024, driven by a 185% increase in AI-related revenue. Micron's $3 billion R&D investment focuses on next-generation memory technologies, ensuring it stays ahead of the curve. At just 11 times forward earnings, and with a projected 55% earnings growth in 2025, Micron is an attractive option for investors seeking value in the semiconductor sector. Here's something to ponder. Could memory solutions like Micron's be the unsung heroes of the AI revolution? Now, let's take a closer look at the numbers from our table to tie everything together. Nvidia clearly stands out with its massive market cap of $3.2 trillion, underscoring its dominance in the AI sector, while maintaining a modest dividend yield of 0.03%. This reflects Nvidia's strategy of reinvesting heavily into innovation to sustain its leadership in the industry. AMD, on the other hand, is focusing on capturing a larger slice of the AI pie with its high PE ratio of 106x, signaling strong investor confidence in its future growth. Meanwhile, Broadcom combines the best of both worlds. Its $1.3 trillion market cap and 1.10% dividend yield show a company that not only innovates, but also rewards its shareholders. Then there's TSMC, with a stable $1.1 trillion market cap and the highest dividend yield at 1.40%, making it an attractive option for investors seeking both growth and income. And finally, Micron presents a compelling case as the value play here, with a lower PE ratio of 25 times and a focus on memory solutions critical for AI applications. These figures give us a fascinating overview of the semiconductor landscape in 2025, highlighting not just the potential for growth, but also the distinct strategies each company employs to secure their spot in this highly competitive market. Which strategy do you think will dominate the next wave of innovation? Let us know in the comments. To round this out, let's think about the larger context. The semiconductor industry is central to global innovation, and its growth trajectory is showing no signs of slowing. The companies we've discussed, Nvidia, AMD, Broadcom, TSMC, and Micron, each play a critical role in driving this progress. But as with any investment, it's crucial to weigh both the opportunities and risks. Diversification and staying informed are key strategies for navigating this dynamic market. Before we wrap up, here's a fun question to consider. What's your prediction for the next breakthrough technology that could disrupt the stock market? Comment your thoughts below. And if you found this video helpful, don't forget to like it and subscribe to Simple Investing Secrets for more insights on building your financial future. Remember, this video is for informational purposes only and should not be considered financial advice. Thanks for watching, and we'll see you in the next one.